Saturday, the 27th of April. I'm going to run through some trades that we were doing during the week, show you the levels, why I chose the trades, and then I'm going to give you an idea of what I think might happen next week. I always start with gold. My favorite market, although at the moment it's not that easy. We had a good start to the week trading gold and oil. So just over here, I've got the 4-hour chart. Now you can see we were trending upwards and we started to break down. We had some good support around the 25-20 area. That was working at the beginning of the week, buying it off there, and then we broke down. Now we seem to be sort of just moving either side of it. At the moment, we're holding above 23.25, 23.20 area, but I'm not counting on that being a support level. I think this is a bear flag. I can't be sure until it completes, of course, but my job is to try and figure out what patterns and trends are forming. Now, if I'm right, you can see the upper trend line here, the lower trend line here. If I'm right, then we'll break to the downside, break 23.20, and that will be the sell signal. We're holding the 100 and the 50 period moving average on the 4-hour chart as resistance. And I've drawn a trend line here. I don't know whether that trend line will still be relevant or whether we'll continue to push higher up to the upper trend line of the bull flag. So right now it's a bit of a confusing picture. And that's why on Friday, I didn't have a trade idea for gold. Some days you've just got to sit back and say, I'm not sure what's going to happen. Let's see what's going to form. And then I can figure out what I want to do, whether I want to trade the breakout of the pattern or do I want to trade the parameters of the pattern, the upper and the lower trend line. I guess right now, actually, I probably would reattempt a long position around the 23.25 area, but I'll review that and I'll stick it in my report when I've decided what I will try on Monday. So that's it for gold. Probably a bear flag. We'll wait to see if we get the confirmation for that. WTI Crude has been one of the best trades for the whole week because we were buying it right down at the low on Monday and Tuesday, and then by Friday we were hitting the highs of the week. So that's worked really well. 81.50 down to 81.00 was my buy area within that 50 pip range. We did that, as I say, around Monday, Tuesday, and then we began to climb. By Friday, we had got as high as 84.46. So we had a full 300 tick rally on that move. If you look at the report that I posted, I think this was on the 24th of April. So 82.40, 83.20, and the break above 83.90 would trigger another buy signal targeting 84.50 and 85.00, 85.20. Well, we got to the 84.50 level, and I think we can continue to push higher. I do have 85.00, 85.20 as my next target. I'm still running my long oil position over the weekend, so I hope I'm right. Okay, here's a mistake that I made during the week. The yen looked like it was going to head down. It looked like it was going to collapse. So I should have been buying the euro versus the yen, Aussie versus the yen, New Zealand dollar versus the yen, and US dollar versus the yen. I held back. The breakouts were clear. We beat previous highs. We beat trend lines. That's the euro yen. The euro is in a longer term bull trend for sure. Breaking previous highs. It was an obvious buy. And for once, I didn't get us into that trade because I'm concerned about the Bank of Japan stepping in, taking some action, either strong rhetoric to halt the slide in the yen or actually stepping in with intervention and buying an immense amount of yen in order to support the currency. And I've seen this happen many times before, and it's punishing when it happens. The currencies can move 2, 3, 4, 500 pips in seconds or certainly minutes. And even if you've got a stop loss order in, you can have a huge amount of slippage on the stop loss because the market moves so quickly. It just vacuums. They take out every offer when they buy the yen. So I've been overly cautious and I have missed a good opportunity there. I have to hold my hands up. Aussie yen as well, big move. I did write in my report on Friday morning that I really should be getting us into some short yen positions. But anyway, I didn't have the confidence to do it. I was too worried about intervention from the Bank of Japan. And look, we have missed out on 250 pip moves there. So I regret that, but I still think it was the right decision compared to the risk of losing hundreds of pips if the Bank of Japan did step in. And I think they're going to be forced to do that sooner rather than later. The market is certainly testing the Bank of Japan because the central bank in the past has claimed that they don't want the yen to fall that far. So they really are being put to the test now. Could be quite a crucial week for the Bank of Japan and the yen. Okay, what I have been sticking with is the dollar pairs, and my strategy for the week was to buy the dollar as it weakened. So that would be sell the euro, US dollar, sell the pound dollar, sell the Aussie dollar, that kind of thing. When you look at the daily chart for the euro, US dollar, it's not really telling me anything. It's a mess. We are trading where we were over a year ago. There, that's a bit clearer. 107.50 is around where we were back in January of 2023. So well over a year ago. We've gone up a bit, we've gone down a bit, but we've gone nowhere. So there is no trend for me to follow. Even the moving averages on the daily chart, the longer term moving averages, the 500, the 200, the 100, and of course the 50, they're all just moving sideways and converging because we have been in a 15 or 16 month sideways trend. So I have to go to the shorter term charts to try and get some short term trade ideas. I've had it in the back of my mind from a fundamental basis. The dollar should at least stay quite firm because it's been obvious that inflation is not as under control as the Federal Reserve wants it to be. And therefore, the market has been scaling back expectations of rate cuts. I think we've got to a stage now after the PCE release this week of expecting no rate cut whatsoever. And I'm really wondering if the tide will turn, the market will even start to expect rate hikes at some stage this year. We'll see. So my strategy was to sell the euro versus the dollar as it rose. My first level didn't work. We went straight through there, around the 106.80 level. But I did say to my subscribers that we had a very, very strong resistance level around the 107.20, 107.30 area. And we were getting into shorts there with stops above 107.55. Now that did work, fortunately, because I wasn't feeling too good about myself midweek when those trades had failed. But ended the week on a good note. We sold around the high of the week for the euro versus the US dollar, and the market did sink quite nicely. I'm still short. I think that the bear trend for this pair will continue, so I'm looking for further moves to the downside. Same thing for the pound versus the dollar. Cable, I got in a bit too early at the beginning of the week into short positions. We had to take a small loss on those. I only ever risk 20 to 30 pips on a trade anyway, so it was no big deal. Then we managed to get into a really good short position around the 125.25 area. Just Fibonacci resistance, moving averages, some other bits and bobs on the 4-hour chart. That convinced me that we should try a second shorting opportunity for the week, and that worked out really well. We did manage to get in around the high of the week, and the market did sell off. And again, I think that this bear trend will continue for fundamental reasons as well as technical reasons. The Aussie versus the US dollar also gave us the perfect sell opportunity. Bounced right to my sell area around 65.55. We had the 500 period moving average on the 4-hour chart, Fibonacci levels, some other bits and bobs. That convinced me to get into a short position. So we managed to pick the high of the week there as well. The market didn't come off as far as I would have hoped before the close, but I think that we will see further losses for the Aussie versus the US dollar. So if you're running that position over the weekend, hopefully it will start to work at the beginning of next week. I am running a short position in the Aussie versus the US. Here is the spreadsheet that I put out on Friday. So that was my sell level in the euro versus the US dollar, 107.25, 107.35. We did get close to 107.55, but not close enough to trigger stops. Cable, the 125.20, 30 area was my sell level. That worked perfectly. We picked the high. Actually, my stop level should be 125.50. That was a mistype. Aussie dollar, 65.50, 65.60 was my sell level. As you saw, we halted right in the middle of there. So that's worked really well as well. I need to put those trades in green because they were triggered on Friday and I'm still running them. New Zealand versus the US dollar, 59.70, 59.90 was my sell area. Let's have a look at that. Don't think we got close enough. We got to 59.69, so we got to within 1 pip of my sell area. So it wasn't triggered. At least the level did work. I picked the right level. Now the US stock market's bounced further than I expected. I thought we'd actually go down this week. So I got the direction wrong. Didn't expect to see such a strong recovery. The first short position we were stopped out on. We then moved up to my next sell level for the E-mini SP, 51.45, 51.55. That is a really, really strong resistance level. You can see it on my chart here. We have a confluence of fibs. We have the 100 period moving average on the 4-hour chart. We actually got the 50-day moving average at 51.55 as well. So there was a lot going on around there. Fibs on the way down, fibs on the way up. Just a big resistance level, and that really did work. Let me see, what was the peak? Or 51.46. So we just clipped my sell area. If you managed to get short, then looks like you're in a profit by the time we closed. And I think that we can see further losses this week in the US stock markets. I think we are building a short-term bear trend, a short-term correction to the downside. The Nasdaq worked a lot better in that the first sell area of 17,740, around that area, that worked. We did dip to, I think it was the third target before the market broke up. I don't know why the market rocketed on those weak GDP numbers and strong PCE numbers. It doesn't make any sense to me. But anyway, I've given up trying to make sense of moves. I just go with it. We then broke higher, but fortunately, we'd already had a chance to take profit on that short position. We then broke higher. Now, for me, the next big resistance level is around 18,000. I'm not sure if we're going to get there. I'm not that keen on selling around the 50% fib, even though we have the 100 period moving average on the 4-hour chart. There's nothing on the daily chart to indicate to me that the Nasdaq is going to turn around just yet. But I really do think that around the 18,000 area, that is a strong resistance. This kind of contradicts what I'm saying, but I'm not even sure if we're going to get there. But I don't see a level that I would sell below 18,000 right now. So I'm going to have to be patient. Either I wait to sell at 18,000 or I'm just going to have to accept that I'm going to miss the short opportunity. Okay, that's it for this weekend. Those are my ideas for commodities, dollar pairs, and the stock markets. Good luck if you are trading this week. Please like, share, and subscribe. And please have a look in the description box. Sign up for my free 5-day challenge to understand all the psychological aspects of trading if you haven't already done so. And please join my free Telegram group where you'll get free analysis and signals during the week.